So hello everyone, welcome to another video. In this one, we're gonna update you on some of the trades we have taken inside of Zentum trading in the last couple of weeks. So we have two very big winners on the New Zealand yen, and we have two very interesting trades on gold. The New Zealand yen trades were taken according to our Zentum strategy, and the gold trades have to do more with the Zentum strategy plus some fundamental analysis. So very interesting stuff. We're gonna do a deep breakdown. If you have any questions, you can of course put it in the chat. And now I'm gonna let Griff take over and he's gonna break down the NJ sell setups.
Sounds good. Let's take a look at the trades. So, obviously, with our trading strategy, we have to be very patient. We've waited a while for these trades, and it's actually been a very quiet year. But patience pays off. And one of the affirmations that I say every morning is that I am paid to be patient. And I definitely was paid to be patient in this case because these two trades made 13% profit. And on my personal account, I actually risked 2% per trade. So on my personal accounts, I had made 26% profit, which is just ridiculous. That's a huge return. There's there's a lot going on with these trades. There's a lot of good and very little bad. So I would say that they were very obvious. It was a very obvious trade to take, and I think a lot of people in the community took this trade as well. Unfortunately, due to spreads, a few people may have been tagged out, but I managed to stay in quite fortunately. So I'd say the main confluence for this trade, which is actually quite a rare one, is potentially this gap over here. I don't know if a lot of people would have really been paying attention to this gap, but if you've done your focus charting, you'll know that gaps are often filled like 80 to 90% of the time. And that was one of the main reasons that I was really keen to get in on this short setup because I knew that this gap hadn't been filled yet. And I was quite confident that this short continuation would continue. I think the best way to kind of analyze a setup is from going left to right. So, firstly, looking at prior price action, we've got this gap. That's the first confluence. The next kind of confluence, which I really like the look of, is we've kind of got this larger ascending channel. It's not super clean, but it's there on a structural kind of basis. I'd say we have this larger ascending, and this definitely helps increase the probability that the trade is going to go in our direction as well. And then we had this very obvious three candle break to the downside, huge candles, clear momentum. It's just all we're really looking for at this point is a confirmation that momentum is going to continue. We had a tiny pullback candle, so we're not seeing any shift, and then we got that confirmation with this breaking candle of the low. Now, I think the only reason you may want to stay out of this trade is this wick. For some people, this may be a large wick. For me, it was on the border, and it's what makes this trade a 9 out of 10 for me instead of a 10 out of 10. The wick is on the larger side. I'd say this is not quite a large wick, it's just barely a medium wick. But on NJ, JPY pairs obviously very wicky, so it's acceptable. This wick wasn't not going to keep me out of this trade. And then this pair trends really correctively, which just means it can trend like this for a long amount of time, which is great for our trailing stop loss. And that's exactly what happened. I entered right there. I set my pending order after this breaking candle, and then I was able to immediately reduce my risk 1 hour after being tagged into the trade. And then I was able to lock in some profit here, 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 and finally here. So that was the first trade, 10%. But there's actually a second trade which made this even more profitable. I'll hide this to make it a bit clearer. And it was this scale in here. I'll zoom in so you can really see it. Now, you may not have wanted to take this trade independently. I think I would have personally, but as a scale in, it's a no-brainer in my opinion. We've got an established trend at this point. We have all the confluences from the previous trade with this ascending. The gap's obviously been filled at this point. The only reasons not to take this trade, in my opinion, is the relatively small break. But as a scale in, with that pullback candle, which shows clear momentum, there's so much going for this trade, and this one made 3% as well. So together, that is 13%. My personal account, 26%. And I think I had around 600 or 800K in challenges running. I can't remember exactly. I hit the profit target on a 100K high stakes challenge with 5%ers. I passed phase one on a 250K bootcamp account. I passed phase one on a 200K FTMO challenge. I reached the profit target on a 200k Blue Guardian account, and I also reached the profit target on a 100k City Trader Imperium challenge as well. So that is 350k, 550k, 750k, about 850k in challenges where I either passed the first phase or reached the profit target. So yeah, there you go. Really great trade, and I think for all of us in the community, it was a breath of fresh air to have a nice 10% winner.
Yeah, definitely. I mean, these JPY pairs, when they fly, like they can really move a huge percentage. And with the way that we trail the stop loss, we can really extract a lot of the move, especially if you get these sort of minimal pullbacks as we got here. So really amazing trades, both of them. This downtrend is something that we must take advantage of. It kind of reminds me of the downtrend we had in 24 in I think it was July where the JPY pairs just absolutely melted without getting like a deep pullback. And if I can annotate here, we just had sort of a meltdown with minimal pullbacks, same as you're seeing right here. So an absolute great catch. And how come you're risking 2% on the personal?
So my reasoning for that is because 10% drawdown is what we kind of aim for on prop firm challenges. We try to
Hmm.
keep our drawdown below 10%. But on my personal account, I've got a really high risk tolerance. It's my own money and I'm very confident in my trading. So I'd be willing to go up to like 40% drawdown. I really don't mind having big drawdown on my personal account. So yeah, my max drawdown is around 15%. So with 2% risk, that would be about 30% drawdown on my personal account, which I'm very happy with. So yeah, 30% drawdown and then is the maximum on my personal. And obviously these two trades alone made 26%. So it pays to risk a little bit more.
Yeah, absolutely. On the personal, it's a different game. And what do you recommend in terms of risk management for prop firms?
So on my prop firm challenges, I consider my max drawdown. So my max drawdown is around 10-15%. And on a prop firm challenge, they only have room for around 10% drawdown. So on the challenge phase, I just risk 1% per trade because that leaves me about enough room as my max drawdown is.
Yep.
And I don't really mind failing a challenge if I've reached my max drawdown. But on the funded stage, I tend to prefer to leave about twice as much room. So if my max drawdown is maybe 10 losses, I like to make sure that I've got enough room for 20 losses in the live phase. So that would mean on a 10% drawdown prop firm challenge, I would do 0.5% risk. So making sure I have enough room for 20 losses, so twice as much as my max drawdown.
Yeah, I think that's the best game plan to approach prop firms. Like you can risk a bit more during the challenge phases, phase one and phase two, but for the funded stage, it's much better to try and keep the account, especially if it's with a reputable prop firm. So yeah, congratulations again on these two awesome setups on NJ, and hopefully we get some more trends like this. We are definitely getting some activity in the markets. I can see it. We're getting setups pretty much every single day. Not the ones that really fit our plan, but they are forming, and some trends are forming as well because it's this risk on environment. You know, we had the massive sell off in the stock market, the dollar was losing a lot of value, and now things are starting to come back, and the stocks are starting to pump. And also, some currencies are starting to heavily trend in one direction, which is exactly what we need to make the percentage. Okay, so for this second segment, I want to go over a couple of gold trades that I took. It was back in March and in April as well, during this sort of massive risk on environment. So, this is the second strategy that I'm sort of developing and live testing. It has to do with fundamentals. So, it's kind of a hybrid between our current entries and also fundamental analysis and the macroeconomic analysis. Why was I looking for buy setups at these points? Well, you got some fundamental data, which was heavily bullish for gold. You had the macroeconomic picture, which was massive risk off. You know, you had the tariffs, you had a lot of fear in the markets. Everyone was scared. The stock market sold off heavily. And that's good for gold. Gold tends to appreciate in a time of a crisis. So something is always moving, you know. There is an asset in the markets that is moving at any point in the day, week, or month. In this case, yes, the stocks were selling off heavily, but you could have been buying gold. So let me go through these two trades. Let's do the bar replay and then I'm gonna drop it down a bit. So for this first trade, uh, I looked at the daily chart first. The daily chart was in a massive uptrend, as you can see here, overall uptrend. But then I zoomed in on the 1 hour chart, as we do for our Zentum strategy, to find an entry. An entry I liked was right here. It was a very simple break and retest. So you had an uptrend on the 1 hour chart, price pulled back with one candle. We continued with a nice big blue candle. I got in with a break and retest entry, or Griff calls it a continuation. It's basically a continuation of the momentum. And then I almost got stopped out. As you can see, what Griff used around 15 pips for NJ, right?
Yeah, 12, 15. I can't remember now. I'd have to check.
Yeah, so generally for the first strategy, you want to have a tight stop loss because it's purely 1 hour chart, purely technical analysis. But for this more fundamental strategy, it's much better to use a bigger stop loss that makes sense on the daily chart because the fundamentals, they take a lot of time to play out. So you want to be in an uptrend or a downtrend, even if there is a bit of a drawdown that happens. So as you can see, I almost got taken out here and then the price eventually did decide to continue going up. In the end, I did exit this trade. I used a trailing stop loss, but it's a bit different. So for our first strategy, we use a trailing stop loss solely on the 1 hour chart. And for this second strategy, I can trail the stop loss either on the 4 hour chart or even on the daily chart, whichever makes sense for me personally. So there's a bit more subjectivity. I think I put it somewhere below this swing low right here, and then I got taken out. So yeah, in the end, I got taken out for around 2% for this trade. It was a nice addition to my FTMO challenge that I have running. Second trade was pretty similar. The idea was the same, get in on the massive uptrend, get in on good fundamental data, get in on the massive risk off environment where gold is just going up. So if we go to the daily chart, this is the second trade right here. I didn't want to look for buy setups at the top. That wasn't something that was very interesting to me. Instead, I waited for a bit of a pullback. So as you can see, both times I first waited for a bit of a correction for the price to pause a bit, and then I was looking for buy setups. I really don't like to chase the price. I really don't like to get in straight on the top. So that was the reason why I got in a bit lower. You get a better price, you get a better risk to reward, and you're not buying the all-time highs. So here is the second trade. If we zoom in on the 1 hour chart, let's first do bar replay, and then we can zoom in on the 1 hour. This was again a simple break and retest right here. We had some momentum going up on the 1 hour chart, and then we broke this level, retested. That's where I got in. Again, the stop loss is pretty big if you compare it to the first strategy. You want the stop loss to make sense on the daily chart. You want to be in even with some fluctuations. So one more interesting thing for this trade is there was almost zero drawdown when compared to the first trade that almost took me out. This one just kept flying, and that's the power of being in an asset that likes a risk-off environment. So that's the power of the second strategy. You can take a trade on many different assets because this methodology pretty much works on all of them. In the end, I did get taken out with a trailing stop loss again. Right here, this candle took me out. And then price did continue going up. So yes, I kind of got taken out prematurely, but I still made around 3% for this trade. Those were the two trades I had on gold. Very nice. You can see this massive uptrend that we had. Now I'm pausing a bit. I'm switching to more of a risk on environment. So I'm actually looking to buy some stock indices.
I know you show us these fundamental trades a lot in our weekly calls in the Zentum Discord, and I know a lot of people have found them really interesting. Do you think in the future there may be some content or a place that they can really learn your fundamental approach in in Zentum? Is that something you're planning on doing in the future?
Yeah, for sure. So now I'm starting to introduce it to the community. I've definitely been live testing this for some months now, and I'm currently in some buy setups on NJ and the pound dollar, which are doing pretty well. So for now, I heavily talk about this strategy in the weekly trade recaps, and I also do a breakdown in my daily forecasts of the fundamentals of the macroeconomic picture of every single asset that I'm personally looking at. And you can actually get access to that for free if you join our free Discord server. So you get access to every single one of my daily forecasts that I post in the Discord. But for now, there's no educational content because I'm still testing this strategy. I want to give it a few more weeks, a few more
Yeah.
months to really refine it so that it's ready to be presented.
Yeah, that's great. And if anyone is interested in learning to trade like me or like Marco, we've got the free Discord. You can access it on our website. Anyone can register and get access to all of our forecasts for free. And yeah, I mean, we're there, we're active. And if you want to learn to trade like us, if you want to start taking bigger trades like this, trading a little bit more patiently, swing trading approach, Zentum's the place to be.
Yeah, and I forgot to mention about prop firm accounts. So I
Yeah.
had some in a bit of drawdown, which I'm now starting to climb out of, and I have a FTMO challenge that is in some good profits. So hopefully that passes the challenge phase. Um, and yeah, if you have any questions, if you guys have any questions, definitely join us in the Discord. You can also send us a DM if you don't want to do like a public message. All of the links will be in the description of this video. But
Thank you, Marco, for your trade analysis. That was really helpful, especially as I
thank
don't
you as
really
well.
do much for fundamentals. It's always fun to learn. And if you guys have any questions, leave them in the comments. Make sure to subscribe to the YouTube channel and join our Discord if you want to learn more about our trading styles. Thank you
See
for
you.
watching.
Goodbye.
Bye bye.